Good morning and welcome to the Trader Planet Pre-Market Open Trade Review. Today is Wednesday, June 16th. We're so glad that you could join us today. This is Darla Tuttle, your host for today's session with Greg Firman, a market analyst for TraderPlanet.com. Today's webcast takes place at a specific date and time, and therefore any opinions given by our presenter may change without notice at any time. Please also be aware that trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This live webcast is being recorded and will be posted on Trader Planet, so you will be able to review the material at a later time. You will also find other previously recorded webinars among our other free educational resources within our site at www.TraderPlanet.com. As one of our more revered Forex educators, Greg Firman is a professional trader and commodity trade advisor that has worked in the stock, futures, commodities, and currency markets for the last 10 years. Greg is Series 3 commodity futures licensed and registered with the NFA and has clients that include individual traders and fund managers from around the world. We're delighted to have him with us today. Let's give a warm welcome to Greg Firman.
Thank you very much, Darla, for that warm welcome. This morning we're going to be looking again into the Forex and equity markets. Now we're going to be looking for pre-market trade setups using the Vantage Point software and our live trading platform via the FXCM trade station. Now what I like to do normally is, before we get into doing our analysis, I like to get into a trade, the presentation. So for this morning, we can see that I've entered 2 positions. These were recommended positions from the actual recommended trades for today, actually, for Wednesday, June the 16th. Now our first position here is the S&P 500. We can see that I've entered into a buy position at 1105.60, which is pretty much right on the number I suggested. That trade currently up $135, $140. We can see here that I've entered it on June the 16th at 8:30 a.m. The second position I've entered is the US Canadian pair on a sell at 103.14. So we're going to be looking at that also. Now we're also going to be reviewing a number of other different opportunities that are setting up potentially this morning, and of course a thorough review of the US dollar index and where we're at with that. So now that we've identified, we've got a couple of trades running here. We've got some very poor data out of the U.S. again this morning, regrettably, on the housing starts. That's going to definitely put some pressure on the equities, which could spin off into problems with some of our currencies and the dollar. But we'll touch base on that as we go forward with the webinar. So to start, let's have a look at the US dollar index and see what's happening. We can see that we've got a buy signal. We've been in a buy. Essentially, we've been buying US dollars based on my recommendations since about the middle of November. Beginning of these webinars, I always touch base on that to identify how long we've actually been in this trend. Now we can see here that we've got the 3-day crossing over the 8-day predicted moving average. The way that this looks, this is an early warning sign of potential trend reversal. Even though we haven't completely crossed the 18-day predicted moving average from Vantage Point, the 3-day crossing the 8-day is absolutely a sell signal. So whether this signal can gain further strength, we're going to have to review that and see see where we're at with that. Now what we have the predicted medium and long-term differences both heading down into oversold territory. So that's a bit of a mixed signal right there. The medium term is in oversold, but the long term is actually just under the 0. So that's suggesting in the longer term the US dollar index has room to move lower. Now our predicted MACD, we've crossed the trigger, we're above the 0 line. Predicted true strength indicator from Vantage Point also crossing the trigger, but again above the 0 line. So not a completely clear signal, but it is also heavily overbought. Now, key levels to watch here. We've closed yesterday at 86.29. 86.81 is our major level, so we've already moved below that. That's again coupled with that 3-day, 8-day crossover. This is all, putting all this together is telling me that the U.S. dollar in general is going to further weaken. Now, there's a very high correlation right now to the equity markets, to the commodity markets, so we have to look at all of these things when we're going into our trading. So looking at things right now, we're going to continue to monitor the market here because we're getting into pre-market open. So we can see that our US Canadian pair here is currently up about $54. Our equity trade is surprisingly still in the positive, to be perfectly honest, because with that housing start number, I don't expect the futures. I expect the market, the equity markets to open up below fair value, but then to recover midway through the session. But again, we'll have to see how this plays out. So looking at some of our other positions here that we've got, based on the Forex weekly outlook from last week and this week, I've talked repeatedly about US dollar weakness is coming. So we can see here from our last trading webinar that we entered into, I still have actually these positions open, which is on the Great Britain US. They're currently up, the first position's up 177 pips, and the other position, the buy position here at 144.85, which was recommended last week, is currently up 310 pips for $1,241. Another big trade that I've been putting out is on crude oil. The dip lower down to that $70 a barrel mark was a great buying opportunity. So we've entered in at 69.59, 71.37. We've got 2,076 on the one trade, 3,485 on the second. So running basically our positions from our last webinars, in the webinars in the month of June, and the one contract from May, we've got about $7,495 in realized profit. Now, again, we've got none of these trades are over leveraged. We can see that I have not gone over a $50,000 trade on the currencies or on the equities or on the crude contract. So I'm staying within the amount that's in the account. I have $53,000 in this account. This, of course, is a demo for trading purposes. Now, it clearly identifies what our equity is. I'm not over leveraging positions. I'm taking a more medium-term approach to trading. So again, this is very important that when you're trading in Forex that we're not over leveraging these positions. Now, if we had $50,000 in the account and we were doing $1 million trade, that is grossly over leveraged. But if you're doing a $50,000 position and you have $50,000 in the account, that works out to a 1-to-1 leverage. So I'm effectively not using any broker leverage whatsoever. If I have a $40,000 position, which I do in crude oil, I'm at the leverage is actually in my favor, not in the broker's favor. So it's always important when you're trading that you can identify this. That you don't want to put yourself in a position where you have to exit a position after 20, 30, 40 pips, especially in the currencies, because realistically, you're not going to be successful. These currencies move on average 100 to 120 pips a day, so a 40-point stop simply will not survive unless we can really get into a very fine-tuned entry point. But I never recommend that, and I'm going to demonstrate a number of reasons why. So we're in this U.S. Canadian pair. So in this trade, so let's do some analysis on the U.S. Canadian. We've got a fresh crossover on the triple EMA cross. That's why I've entered. We want to identify here where our pivot resistance is and where our stop should be. Two key things in Forex if we're going to use stops. So 103.08, 103.80, and our key level of pivot resistance in this case is 104.14. So essentially, guys, what we're doing is we're buying anywhere between this area of 103 and 104 all the way to